We're live.
Hello everyone, and thanks for coming tonight. My name's Mark Allison, I'm the leader of the council, and welcome to the meeting of the Merantun Development Limited Subcommittee on 21st of December 2020. I'm joined by Councillor Byers and Councillor Welton and various officers of the council, as well as by Councillor Peter Southgate, who's the Chair of Overview and Scrutiny Commission. First of all, shall we go through the items of business? Number one, are there any apologies for absence? There shouldn't be any. Number two, any declarations of pecuniary interest? That's a no on that. Then we'll move to the minutes of the previous meeting that are on pages 1 to 2. Can everybody agree those, or is there, it's probably easier to say, does anybody dissent from them? That's good. So those are approved. Obviously, the large part of the minutes describe how this was the stage at which we would be reviewing the business plan of the company, and obviously the work has now been done as part of the progress report, which is item 4 on the agenda. Just to give us some commentary on the progress reports, I'd like to bring in the Director of Environment and Regeneration, Chris Lee. Would you like to talk about it, please?
Yeah, thank you, Chair. So in introducing the report, the first point I'd make is that this was a point that was anticipated in the original business plan, that we might need to bring this decision in front of members. And it's unfortunate that we have to. And at the last meeting, we reported that the business plan was being reviewed. And this report follows on from that review and confirms the recommendation that the shareholders representative, myself, received from the company, and the directors of the company are here this evening if their advice is needed. So essentially, whilst the housing company could still make a profit for the council, this is now much further into the future. The risks have grown, and in parallel, the council's financial challenges have grown and are well known, particularly those related to COVID. And in that context, it's recommended that unfortunately the company's closed down, and that the land, rather than transferring to the company for development, remains with the council. That's not to say that these sites aren't developable, and we believe that the company has added value to those sites with the agreement of planning permission, and a private developer will find these attractive with that enhanced value and those planning consents approved. If agreed, the council will want to consider the timing of the disposal consistent with the market in order to ensure best value. And some of the factors that are affecting the council won't affect a private developer who may well want to bring these forward as soon as the market allows. The reason that the business plan has deteriorated are really two parts. One, costs have increased beyond what was anticipated. The inflationary allowances that we made provision for have changed because of the length of time. The council's or the company's approach to decarbonisation of the housing is consistent with the council's aspirations, and that's an emerging technology, and those costs are beyond what was expected. The cost of construction and materials, we estimate, and the company estimates, have increased beyond what was originally expected. And the affordable housing that's provided for was beyond what was viable, and effectively ate into the developer's profit, or what would have been a developer's profit, and that has added to the challenge. In parallel, the predictions around income are less positive than they first were. The PRS market, while still attractive, as you look ahead, the rental yields, the rental growth is less reliable for the 30-year period that we're talking about. and that may be related to short-term factors around COVID or Brexit. But over that 30-year period, it does look as though the rental growth that we anticipated may not be as predictable at such high levels as we expected. One other factor is around the Public Works Loan Board, where the government more recently changed the interest rate to authorities, which has added to the cost of borrowing for the council, and that cost is passed on to the company. And the government guidance around investments for yield, which this could be interpreted as, has changed, and authorities are discouraged from such investments. So the guidance is much more strengthened around that. Those are factors that we've had to take into consideration. So taking all of those factors into account, even though the company could still make a profit, it is over a longer period. And with all of those risks and the prevailing financial position that the council faces, it's with a heavy heart, really, that the company presented this to the council, to myself and to Caroline, and that's why we're presenting it to you. The matters around the way in which the company would be closed down are matters that we've just recently taken advice from external company lawyers, Bevan Britton, and their advice is that this is a very straightforward process because the assets, the land hasn't transferred yet to the company. The process is straightforward and can be concluded within 3 months, providing there's no business transacted by the company using the voluntary strike-off process. That can be concluded by the end of March, which is good timing because that's the point in time when the company's accounts would need to be finalised. So we can conclude it within this financial year if this decision is taken in a timely manner. I'll close there, Chair. There may well be questions, and indeed there may be questions of the directors as well.
Yes, thank you for that. As you say, there are directors here from Merantun Development. It's obviously disappointing that your conclusion is that the situation has changed from when the company was set up, and that the business plan has concluded that it's not really worthwhile continuing with the scheme for a number of reasons. I've got Roger Kershaw, who's one of the directors of the company. Roger, would you like to add anything to what Chris has said, and to explain how the reasons that the company was set up a number of years ago, no longer can we expect the kind of returns that we'd anticipated back then?
Well, thank you, Chair. I mean, Chris has made quite a lot of the points I would have made, but from the company's point of view, in summary, and a lot of detail in the report, the costs have risen in terms of construction over the time between the original business case and now, as it were, and the returns have fallen quite, potential returns have fallen quite dramatically, which presents a real challenge to the company to furnish the loan in the initial period, and it won't be able to fully meet its interest payments to the council until something like 2049-50, which is a long way off, which presents real cash flow risk to the company, and of course a very poor return to the council over that time for the risk involved. So risk return ratios have worsened. From the council's perspective, Chris has sort of outlined the extra risks and concerns from the MHCLG and CITFA with regards borrowing for these undertakings and etc. But I do believe that the company has added value to the land by obtaining the planning permission, and that is a specific realizable gain that when the land is sold will return. And as Chris outlined, the company recognized this as well as the council, that there was always an added potential for stepping off at this stage should the metrics work in our particular favor. So generally, from the company's point of view, it was considered too risky an option for the viability of the company to continue with this particular proposal.
Okay, thank you. And it's worth referring to the minutes of the last meeting, where it was described that a number of factors that would be significant in the review, including the council's own financial position as a result of the COVID-19 pandemic, the impact that the pandemic had on the housing and rental markets, and Brexit. But it does appear that you've gone beyond that as well, and looked into the issues such as the Public Works Loans Board rates, and so it's quite a detailed piece of work that you've done to come to these conclusions. I wonder whether there are any questions from the cabinet members of either Roger or Chris. Councillor Byers, do you want to ask some question?
Yeah, thank you, Chair. Two questions, if I may, and just to go into a little bit more detail of what the director was talking about. Chris, you mentioned that costs have increased, and they've increased beyond what we had allowed for. And I just wondered if you could give a little bit of rationale as to what's caused those cost increases, specifically in terms of construction and materials. And secondly, yourself and Roger have both talked about the Public Works Loans Board and some of the changes in government guidance. And I just wondered if you could outline that in a little bit more detail, and what impact that has on the business case that was agreed for this when we set it up.
Firstly, on the question of the construction and materials, I don't think we can be absolutely certain what's caused the predicted increase, and it is only a prediction, of course, until such time as anyone goes to the market in order to procure construction contracts. It's impossible to say whether these predictions are correct or not. But the professional advice that we're getting is showing that comparable contracts are showing an increase in the supply, the cost of materials and construction. Now, that may be, at least in part, short term, and may be related to Brexit. We do know that Brexit is likely to have an impact on the supply of labour to construction sites, and the supply of those materials where they are from abroad. That is affecting the price of those materials. We also included an inflation rate prudently in the business plan, but the passage of time has meant that inflation rate is now needing to be updated, and the updating has shown that adds additional cost as well, going off into the future. So those are the main changes. And as I mentioned earlier, the cost of affordable housing, which is above and beyond the viability assessment that was provided for. But the company knew that they would need to provide some affordable housing, but that has added to the costs that the company is now bearing if it were to proceed. On the PWLB, I don't know whether that's for me to answer as well, but I'll add a little to the answer I gave earlier. And there are two issues here, really. The first one being, I think, a 1% change in the rate for these types of investments that was made probably about 2 months ago, I think, by the Public Works Loan Board following Treasury decisions. So that's added, is immediately passed on to the company. And then the guidance around investments made by authorities into assets which are purely to develop a yield, purely to return a profit, rather than regeneration schemes per se. And I think this is particularly in light of authorities which have been buying retail shopping centres and other investments of that kind, in order to, in the government's view, properly reflect the risk that they are taking on and to discourage that sort of investment. The guidance has been tightened such that those investments are now less favourable, and that's in parallel with the interest rate increase.
Thank you. Actually, can I just expand on that a little bit, because what you're seem to be saying there is that the borrowing cost for us is now higher than we'd anticipated it would have been, but presumably for a commercial developer, the borrowing cost has stayed the same throughout, so they would not have been they would not be at the same disadvantage in terms of increased interest rates that we would be, and also possibly like some of the commercial developers, would they have money in the bank that they could use that, that obviously we don't have? We were intending to borrow completely for this. Is that a correct summary at all? Or do you have
that is correct. That is correct. Yes.
Just to add to that, Chair, I mean, it's as much a case of MHCLG and indeed sort of SITFA, the accounting body for the public sector, have raised significant concerns around councils entering into investments that create returns, and actively discourage them in it. And going forward, the proposal is that the Section 151 officer will have to sign off that there was nothing in the capital programme pertinent to pertaining to this sort of creating revenue streams in areas like this. And of course, it won't be lost on members, although it was of an entirely larger scale, of the difficulties that Croydon experienced in their endeavours in this sort of particular area of housing, which is added to the risk profile.
Okay, and those changes to PWLB rates are largely down to the government changing their approach over the period that Merantun been in existence, but unfortunately just at the point when we were hoping maybe to borrow. Is that correct?
That's correct.
Yes.
Okay, did you want to ask any further questions, Councillor Byers, or shall I'll take them in turn? If you think of any more, come back later. But Councillor Wilson, you were indicating, do you want to?
Yes, obviously we've touched upon market conditions, but how does that impact in terms of yield and the private rented sector, given that obviously this is a major premise in terms of which the business case was based on, and the economic data relating to that, and what impact has the current economic conditions through COVID had on the business plan?
So, I mean, all of these are predictions, but based upon professional advisors, and I know that the company has used Savills and other companies in order to provide it with the most contemporary market intelligence. Demand for PRS remains stable, but the advice is that it's softening in London and has done throughout 2020. Now, that might just be a temporary matter due to the virus and the increase in home working. And the build to rent product is still popular. But what we have seen is that the predictions around rental growth are not as buoyant, not as positive as we originally anticipated. So when we're looking at a 30-year plus investment, we need to be mindful of the direction of travel and the rate of growth. And I suppose there's a lot of questions around the housing market per se and the demand for housing in London, the demand for housing outside London because of the shift to home working. And some of that will come into play for other regeneration schemes, but we're principally solely looking at these 4 sites at the moment, and we must take into account that market intelligence, which is showing a softening, and that plays into the detailed business plan, plays into the rental growth and the return to the company, and in turn the company's ability to pay any loan that it might take on. Thankfully, it hasn't taken that loan on, but that loan would need to be repaid, and so there's a greater question about its ability to pay that loan. And whilst the more positive predictions show that that loan could be repaid over the period of the term and the council could enjoy a dividend, there are so many moving parts in this business venture that risk is at the moment too high a risk to take on, given the council's financial position. So it's for that reason that predicted change in the the income that the company would enjoy is one that we're suggesting is too great a risk to take.
And I have a further question I'd like to ask.
Sorry, Councillor Wilson. I noticed that that the Director for Corporate Services wanted to come in and say something. And since we were just there talking about a lot of the financial implications for the council of what's been happening, I wonder whether now would be an appropriate time to take her, and then we can come back to you in a second. Caroline, do you want to say something?
Yes, thank you, Chair. I suppose it's just to flag that the change in the PWLB rates wasn't a couple of months ago. It has been a lot longer than that. And indeed, there is talk that that will change back down again. But I suppose the company finances appear to have moved on. Originally, it was going to start repaying the loan and we get some interest, extra interest on the loan back from year 4 and a dividend in year 15. But that's now not going to happen until sort of the end of the period of the loan. So that's when they would repay the loan and actually give us a dividend. So it's gone much further out, any returns back to the council, and therefore it did not make sense to actually lend them the money in the first place to be able to do that. If the basis for the company being set up was actually to make a return to the council, it was no longer going to do that. Thank you.
Okay, that's very clear. Thank you for that. It's very disappointing, but thank you. Councillor Wilson, do you want to ask your subsequent question?
Yeah, I have a further question. Obviously, the councils have set up wholly owned property companies, and Croydon Council set up brick by brick, which obviously has led to some financial difficulties, as we're aware, for that council. How did the Merantun model differ from brick by brick?
Okay, so as I understand the brick by brick model, it was purely housing for sale and a much bigger scale than Merantun. And brick by brick, from what I've read, was particularly affected by a decline in the sales values that they were achieving, and the council then purchasing properties from brick by brick through further borrowing in order to turn those into affordable housing. So they were different in the sense that it was a much greater scale. It wasn't about the PRS market, it was about housing for sale and affordable housing. And they were affected by a downturn in the sales values that they anticipated.
So if I can just add to that as well. So they've kind of, Croydon and brick by brick have gone beyond the point at which we're at. And so they have started to incur where the real heavy costs are, which is the construction. But because of when we set up the company Merantun, the difference was that we deliberately said that we would have a stepping off point, a sort of reassessment at this point after we've increased the value of the land through planning application, but before the additional heavy costs of construction come in. Is that a fair summary of our strategy and why we're kind of like at this point of making a decision tonight?
Yeah, I think that's a good summary. I don't know whether brick by brick did anticipate any stepping off point. Certainly that's not been evident from the evidence that we've seen, but it was evident in our business plan.
Okay, well, I'm pretty sure I asked for that, so I'm pleased that we have done. Anyway, now might be a good time actually to bring in Councillor Southgate, and then if Councillor Byers or Welton have anything further to add in a moment, so we'll bring you back in. Councillor Southgate, do you want to ask questions or say something?
Yeah, well, if I may, I'll just sort of carry on with some thoughts I've had. And Chair, thank you for the opportunity to speak at tonight's meeting. Looking back through the minutes, I see these meetings are normally over in 5 or 6 minutes, but I do think we should take a little longer tonight because it's a fairly momentous decision that we are making, and it's worth thinking through the consequences before we commit, or you commit. I was surprised when I first heard of tonight's report and recommendations that Merantun be wound up. And then I must be also deeply disappointed because we've had Merantun around now for, I think, best part of 4 years. And indeed, on a cross-party basis, it would be true to say we're enthused by the concept of Merantun having its own housing company, albeit on a very modest scale. And financially, the project looked very sound. We had the spread on the interest rates between the PWLB rate and a commercial rate to be charged to the company, and then a flow of dividends to come. And even looking back through the minutes in July, we were still being fairly positive about the assurances on how it would all work. Now, we're told various factors have impacted the business plan, the pandemic, Brexit, borrowing costs. But really, what has changed? We've had Brexit around now for more than 4 years. COVID has been affecting our lives since March, and although I hesitate to trespass into the area of the PWLB rates, but I do think that from my reading this afternoon, this would constitute or could be perceived more as a regeneration project, and it's certainly not a debt for rent type exercise on commercial property. So whether that mooted reduction in the PWLB rate would apply, I think is at least worth testing. So what does seem to have changed, I'm afraid, really is our appetite for risk. And you might want to just think back to the last 2 corporate peer reviews we've had and their conclusion in not quite so many words that we are perhaps rather too risk averse as a council. Rather than picking apart the figures in the report tonight, they are figures at 2 discrete points in time, and perhaps a third set of figures at a further point in time would again produce a different outcome. If you would just perhaps consider the impact of cancelling Merantun on 2 constituencies, really. One is the residents of Mitcham, who maybe feel with some justification they've been neglected over the years. It doesn't send a very positive signal, does it, to tell them that the council no longer wants to invest in 93 new homes for Mitcham, including, if I recall correctly, about 20 or so affordable homes. And secondly, do bear in mind we're embarking on a search for a development partner for the regeneration of Morden early next year, which is potentially a £1 billion project to deliver over or around 2,000 new homes over 10 years or more. And again, what kind of signal does it send to those potential partners if we don't have enough faith in our own borough to invest some 15 million or so in a relatively modest project like this? And I would point out that even though it's a lesser return than we anticipated at the outset, it is still a positive return of 3% and more than our treasury operations can make. I think the final point really is the signal it sends to be taking this decision tonight at a special meeting of the subcommittee in the depths of winter, 4 days before Christmas, when it could easily have been delayed to the next scheduled meeting on the 18th of January, which might just have allowed a little bit of time for some pre-decision scrutiny. All in all, it looks rushed. Somebody no doubt will make something of that. I'm not going to, but I do really worry about taking any irrevocable decision tonight that would put Merantun beyond reach, because there is so much that might change in the near future to change the picture and to change its viability. Thank you, Chair.
Thank you, Councillor Southgate. And I hope that the opportunity to raise quite a number of points has been useful. In fact, so if we'll try and summarise what you've been saying, and maybe give some of the flavour of maybe what the panel might think, but I would also like to bring in officers. And obviously, one of the things that you've pointed out is that the previous meetings have been much shorter than this one, and generally that's because there tended to be quite routine updates to councillors. And so I can absolutely agree with you that given the importance of this meeting and what we're being asked to consider, it is quite right that we take longer now to analyse the position, and to do so publicly, and with with yourself as representing scrutiny present as well, to make sure that we do that. I think that you've talked about how this is different because the Public Works Loans Board situation is different for us, because we're not intending to raise the money in order to make a profit. But I don't know whether officers, when it comes to it, can just correct me on this, but I thought the remit of the company was actually that it should make a profit. It wasn't. We're not a regeneration company. We are a company that's there to make money, which can then be used to protect council services. So that's more in line with some of the things that some of the other councils have got into some difficulties with in recent years. And you talked about the attitude to risk, and some of the way that we may have been questioned in the past. I wonder whether officers want to come back to that a little bit, because obviously that was in advance of the big financial troubles that the country's gone through over the last year. And maybe it might sort of demonstrate that some of the attitude that we took earlier, perhaps Caroline will want to talk about that in a moment, might actually show that some of the approach that we had may have been better than it was considered at the time. In terms of Mitcham and our commitment to Mitcham, I wonder whether somebody can come back in a moment just to stress that the planning application has been approved on this site, and the intention is that these premises will be built obviously by another developer, and that we've obtained planning approval which shows that the schemes are achievable, and so that in itself shows a commitment to that scheme. If somebody wants to come in as well, just to respond to the point about how this modest company is very, very different to the partnership scheme that would be involved in regenerating Morden, which is obviously a key priority for the council. And then finally, it is worth what Councillor Southgate asked as to why are we doing this so quickly. It may be helpful if somebody could respond to the point about why we think that it's important to do this now, and that making this decision at this point is the right thing for the company and for the council. So there's quite a lot of things there, and we're not in a room, so you'll have to indicate who's going to go first.
Chair, if you like, I'll kick off with some of the responses.
Thank you. It should be thorough, Chris, and if you need help from other people, then
happy to
pass it on. Thank you.
So I suppose just to reinforce one of the first points I made, that this decision isn't brought forward lightly, and it is with a very heavy heart. And I know that the company deliberated over this for some time in analysing the business plan, and the company reached its own conclusions before bringing those to the council. And they have a duty as company directors to look at the viability of the company they're entrusted with. And I think they've discharged that responsibility fairly and lawfully. And it is important that they bring forward those recommendations in a timely fashion. And that's why it's brought as early as this, rather than waiting until the new year. And it was with a heavy heart because, Councillor Southgate, you set out the history of the company. And it was an exciting venture, but reality has unfortunately presented a different set of financial predictions. And you're right that some of those were certainly around at the start of this calendar year, but I think it's more recently that those have crystallized more firmly, particularly as we're getting to the point of starting to, or the company was getting to the point of starting to seek significant further financial demands on the council in order to commence the construction part of the process. And whilst money has been spent so far, the very significant sums of money are yet to come. And that concentrated the mind and focused attention on the business plan. And as I say, some of those cost increases have more firmly crystallized, such that it is prudent and important to bring them forward now. And I think the council is prudent, and I think the company is prudent. Maybe another description would be risk averse, but certainly risk aware. And I think given the prevailing conditions, and Caroline may wish to add to this, I think it is important that the council and the company doesn't add to the burden of the taxpayer by taking on risk at a point in time when we're seeking to insulate ourselves from risk and to manage some of the unknown consequences of the virus and the impact on not just Merton but on London. That's not to say that this development won't go ahead, but it won't go ahead if this decision is taken. It won't go ahead and be delivered by Merantun or by the council. And I believe that developers who have different financial circumstances will be attracted to these sites and the planning consent that's been granted, and either deliver them as on paper, or they may well come back and seek to have amendments to that planning consent. But I think the timing of that disposal and the timing of any development is a matter of conjecture, but I think they will be attractive and that Mitcham will benefit from these developments as and when they're brought forward. And a point that Councillor Allison made is that this is a very different venture that we're seeking to close down now from the one which we firmly believe is still possible for Morden Town Centre, where separate conversations on another occasion will, I think, illustrate that Morden will still remain a very attractive opportunity for a joint venture partner to invest in a very significant part of town centre reshaping and placemaking and the delivery of housing at scale alongside other development opportunities around retail and commercial and public realm improvements. So that's not to be confused with this particular venture, which we're unfortunately looking to close down. The Morden Town Centre regeneration should be one that will certainly attract investment and interest from private developers. So I think I'll close there. But the final point I'd make just before handing over to Caroline to say a little about the council's financial position is about the object of the company. And this is a company that was set up with the very stated and clear intent of generating a profit for the council. So it wasn't a regeneration vehicle. It wasn't a supplier of affordable housing. It was to deliver a profit. So whilst I suspect the government's advice will always be subject to interpretation and be subjective, I think it's fairly clear what the objects of this company were, and the PWLB changes may well have a substantial impact on the council's treatment of the company and any loan to that company. But I'll let Caroline add more, because that's more one for the accountants rather than the novices.
Thanks, Chris. So, Caroline, that kind of question really then is, because we were so explicit about the purpose of the company being to make a profit, then does that mean that we can't really wriggle out of the rules around the Public Works Loans Board?
In my view, yes, because I would be the one who'd have to sign off that loan. And we were very clear that it was looking to make a return to offset our overall budget problems and deficits that we had, and therefore make a contribution towards, so we didn't need to make bigger savings elsewhere. So the fact that that return is no longer there will have an impact in the short, medium term. Longer term, by 2049, 2050, yes, it may make a profit and give us a return, but we can't afford to wait that long. And I was behind the original business case. And if you look at the timetable, you know, we sought to get planning permission by June 2018, start construction by that December. We're 2 years on, and we've got the planning permission, and I think it is the right time to actually review everything. There wasn't only an increase in costs, there was a fall in income assumptions as well. Not necessarily rent levels, but the value increase in the properties that we would then be looking to get a return back on. That had quite an impact on the return to the council, and well, the return to the company, and therefore the return to the council. The fact that we thought we would get dividends from year 15, we don't till we actually sell all the properties. Again, it's very speculative then if we would get that return, and I think it's just on that basis. I wouldn't say that we're have too negative an approach to risk. We have got this far. We tried something new, and it just hasn't paid off, but it doesn't necessarily mean that we won't explore other opportunities. And the modern regeneration will be a different opportunity. And I don't think this decision will stand us in bad stead, because I think it shows we are determined to make sure that our schemes do make the return for us that we need. And that will be part of what we look at with the modern regeneration, to actually increase the number of properties, to increase the value of our assets that we will be transferring into this joint venture arrangement, as well as we're putting in potentially £6 million worth into that, and our assets are significantly more, to be able to make sure that we get more than just a Costa in Morden. Thank you.
Well, that's very clear, Caroline. And also just to ask a silly question, obviously the attitude, you've explained that the attitude to risk has actually always been there, otherwise we wouldn't have set the company up. However, the reality is that in the interim, since setting it up, the PWLB has changed. That has materially affected the returns. But in terms of the why now, because obviously that some of those changes started to emerge, or some of the government hostility towards councils using the PWLB to make returns has been from earlier in the year. Am I right in saying that if we'd decided just before the planning application went through that PWLB was causing a problem, then we would have basically done everything for no advantage? So it is actually the appropriate thing to have done, to have waited until the planning application had been approved, so that we could obtain the uplift in value before making this decision. And that was why we set this as a stepping off point.
Yes, I would agree. And in some ways, the fact that it's, you know, the planning permission, because obviously we were going to go in February, then was going to go in March, and eventually got it in July. So even those, we sort of been waiting to plug the numbers into the business plan. So even those delays had a further impact on it. But again, why now? Peter Southgate, you may be aware of the increased challenge we've had around declaring the authority as a going concern for our external audit. The same challenge will be presented both for Chas, our other local authority trading company, as well as Merantun. So our companies have been given until the end of March to actually submit their accounts. And once we know that that business case is no longer sustainable, we would not be a going concern. So the earlier we can take the decision to close the company down, the better in good stead it helps with the audit to be able to then make sure that we take the necessary right steps. It also helps with then reviewing the impact in the business plan. So we're having to write out some additional capital receipts and interest on those that we thought we were going to get from the original repayment of the loan, as well as taking out some of the loans that we thought we were going to have to make, and therefore the necessary adjustments to the business plan as a result of that. So the longer we wait, the bigger impact it has on the business plan as well as on the company itself.
Thank you, everyone. I actually think that quite thoroughly responds to most of, if not all of, the points that Councillor Southgate had made. and particularly the financial effect on the council, I'm reassured that we still think that nevertheless the sites themselves are still likely to be attractive to developers, and that we're obviously very hopeful that they will get built, and we've done great work in getting those planning applications approved. But Councillor Southgate, were there any points that you wanted to come back to there, or in any areas of what you raised that haven't been responded to by officers tonight?
No, I'm grateful, in fact, Chair, for that pretty thorough analysis of the comments I've made and the answers given. And yeah, let me add to my thanks both to James and Paul for going through quite a lot of the detail this afternoon. And let's just hope when developers look at those sites, we can persuade them to stay with the relatively high quality build and decarbonisation aspects that we've built in, because from too long an experience in planning, we do know developers can come back and whittle down the original spec. It would be nice to have what we would like to see there, not what some developer just wants to maximise the profit on. But thank you. No, it's been a useful, very helpful discussion. Thank you.
Okay, and I do take on board the point you made about not being a short meeting tonight, that we also do this thoroughly. And those points that you made about planning, we will impress upon developers that we love Mitcham. I'm a Mitcham councillor. I think it's a fantastic town with great prospects, and a good developer will increase the prospects for Mitcham. So we would certainly encourage them. But before I move on to the last little bits, I just want to see whether Councillor Byers or Welton had any further questions that they wanted to ask of officers whilst we're here. Councillor Byers, fire ahead.
It was just really building on that last point of Councillor Southgate's and your own, just around the sort of process that the council will now undertake should we take the decision this evening to dispose of the sites to developers, and what the timescales around that might be.
So we've got no absolutely firm conclusions on that if this decision was taken this evening. It really depends on the market conditions and when would be best to bring these sites forward for disposal, if that's the council's desire, whether to sell them as individual sites or as a collection of 4 sites with the planning consent that applies. And those discussions will take place following this decision in order to check the market and to ensure that we get best value.
Thank you. Was there anything further? Okay, so shall we move to the recommendations that are in the report? The recommendations A, B, C, and D. Do you think it would be helpful for me to read them for the record? Anyone who's not got the paperwork. So basically, we're noting the decision of Merantun Development Limited Board that the business case is no longer viable and not to proceed with the development of sites. And B, we're to note that London Borough of Merton owned land will not be transferred to MDL, Merantun Development. And C, we note that the business case for the development of private rented sector housing at the scale set out in MDL's business plan is no longer viable, and to commence the process for closing down the company. And D, the subcommittee agrees in principle to wind up the company and to authorise the shareholder representative, which is Chris, in consultation with the chair of the MDL subcommittee, the Section 151 officer and the monitoring officer, to agree the process to be followed with regards to winding the company up, and act on behalf of the shareholder with regards to any resolutions that may be required. So that's quite long, but can those recommendations be agreed?
Agreed.
Okay, and Councillor Byers is indicating agreement as well.
Apologies, I was nodding, but agree.
You're slightly in the dark there, but I sort of thought you were nodding, so that's good. So those recommendations are agreed. I'd like to also thank everybody who's been involved in Merantun. It's achieved many of the things that we'd hoped that it would. But obviously the changes that have taken place have had an impact. We've been able to take these 4 sites and show that they can deliver housing and affordable homes for our residents. And I think that we've agreed that the housing, the planning application being approved has increased the value of the sites, which is benefiting the council as well. Obviously, given the financial situation of the council, through COVID-19 and Brexit, but really because also as well of the Public Works Loans Board policy, there isn't a business case now. So we'd like to thank everybody for their efforts in this, but now move along with the recommendations to wind the company up. But thank you everyone for your time, and we'll see you all soon.
Thank you.
Bye-bye.
Thanks. Good night.